Well, first up, inflation is expected to stay within single digits throughout the year, according to new data from the IMF and the Bank of Ghana. But what does this mean for interest rates and borrowing costs? We take a closer look.
Let's first start with the IMF. And in its Economic Outlook report on Ghana, the fund is looking at the country ending the year with an inflation rate of around 7.5% or at most 8%. However, this is based on government sticking to the current programs that has gone a long way to stabilize the economy from last year. It also highlighted some threats to this projection. For the Bank of Ghana, the forecast was captured in its monetary model report that will be presented to members of the Monetary Policy Committee later this month for review. The Bank of Ghana is looking at inflation slowing further to 4% by April this year, before it picks up for May 2026. However, the regulator is still optimistic that we would end the year staying within that single-digit band for 2026. The policy rate currently stands at 18%. In the Bank of Ghana, Governor Dr. Johnson Isiama, at the last meeting in 2025 of the Monetary Policy Committee, disclosed that they would move to cut the rate again as long as inflation drops. So, we should look forward to the policy rate being cut later this month. That could impact on interest rates in the coming months, as well as the cost of credit in the country. Now, that could go a long way to reduce the cost of doing business in the country for firms that finance their operations with bank loans.
Joining us on Zoom, Dennis Brown, Associate Director at Deloitte Ghana, as we anticipate the first Monetary Policy Committee meeting for the year in a few days. Good afternoon to you. Thanks for joining us. So with inflation, or with the IMF projecting year-end inflation at around 7.5% to 8%, and the Bank of Ghana forecasting it could slow to 4% by April, do you expect the central bank to cut interest rates soon?
Yeah, good afternoon, Daryl, and good afternoon to your listeners. Personally, I'm not expecting the Bank of Ghana to, carry out, significant cuts soon, primarily because we've seen that in recent past. I think over the second and third quarters of 2025, what I'm expecting Bank of Ghana to do will be to, hasten to further cuts and rather to assess the impact of what the previous cuts have been. I mean, there's a certain bigger goal that we're aiming to achieve, which is to make credit or capital cheaper, and for that to influence the supply of capital to the private sector, and for private sector to take advantage of that to invest in the real sectors of the economy to, grow the economy. That's the bigger goal. So as we do that, we might pause to assess the impact of that. And if there are other bottlenecks that is not allowing that impact to play out, the Bank of Ghana may have to, look at a different strategy or work with other fiscal institutions to look at, correcting those bottlenecks to allow the pass-through effect as we expected. So I'm not expecting, Bank of Ghana to hasten to do additional big cuts. I'm expecting for them to be slow to that, to assess the impact as we've had so far, and to take a decision from there.
And if inflation continues to fall, how likely is it that borrowing costs for businesses and households will come down this year?
Yeah, very, very likely. And I think the evidence lies in what we've seen over the last several months. We've seen a drop in average lending rates, and we know that is largely in part driven by the drop in the monetary policy rates, as we've seen over time. And yes, so we expect that as inflation drops and it creates room for further cuts in the monetary policy rate, then we are likely to see average lending rates also drop. Average lending rates typically, also references inflation rate, because when lenders lend money, at worst case scenario, they want to maintain the value of that money, and so therefore they want to compensate for inflation, which eats away the value of the money. But of course, they are also entrepreneurs, so they want to make profit. So it has to be inflation plus a margin. So if you look at that equation, the more inflation drops, the more likely it is that lending rates or cost of borrowing is also going to drop in 2026.
All right, let's talk about the risk that the Bank of Ghana cites rising utility tariffs and global price pressures could push inflation up. How big a risk is this to the current economic outlook?
Okay, I'll take that in two parts. So they mentioned global prices, right, which I would say is like an international happening that is not within our control. I can also cite international or geopolitical tensions, like what we see between US and China and all these talk of tariffs here and there. I can say confidently that in 2025 we benefited from that, especially after the first quarter. We saw a drop in the value of the USD because China offloaded their holdings in USD bonds, and other countries benefited, including Ghana, and so our currency strengthened in part based on this. Of course, that is aside other local factors that have also, impacted our currency. So that can reverse. There can be geopolitical tensions and global price outcomes that can be unfavorable. It's gone very favorable for us in 2025. It can be unfavorable in 2026. We hope not, but if they are unfavorable, we are just price takers in that regard, and we would have to just bear the impact. We may have to only, put in measures to reduce the effect, but we can't prevent it. That's what I mean by it's out of our control. So that's a big one. But then they mention other things around utilities and energy prices, which are also big, but at least for that we have some control depending on how we organize ourselves. So if we organize the production of energy and other utilities quite well, I've seen Tor coming on board with supposedly some expected volume of refined petroleum. We've seen the talk of a gold refinery coming on board so that we can add value to our gold, etc. All those things can be, if you like, call them shock absorbers, right? In relation to the commodity prices, because we can add value to it and mitigate the impact that we normally feel when we just, export primary commodities. So in part, there are factors that we do have some control depending on how we organize ourselves. We might be able to reduce the impact, but there are also factors that are completely external that we do not have much control over, and we can only hope that they play out favorably as they did in 2025. Other than that, we would have to feel the pinch.
Well, the IMF data has a caveat to it when it talks about inflation. It's saying that we would reach or would keep the single-digit inflation if we continue to follow their program, the economic program, if we stick to it. How important is that, and what will happen if we don't stick to the economic program, the requirements?
Keeping a single-digit inflation is very important for us. If you look at what we have determined as our optimal inflation band, which is the 8% plus or minus 2%, that's largely, us expecting for inflation to stay within the single-digit band, because we see that that's very optimal and, enhancing in terms of, economic productivity, etc. So keeping a single-digit inflation is by no chance very, very good for us. Of course, that also tends to boost investor confidence. Investors typically would like to operate in markets that are low in inflation. If you look at where we've come from and we've driven it all the way to a single digit, the best thing we can do for ourselves is to try and be on that trajectory going forward to boost investor confidence. However, if we are unable to achieve that, the reverse is also the case, where investors might look at it and begin to think that what we have achieved over the last several months is probably short-termist and only based on measures that were to treat symptoms rather than to address the underlying weakness. And they might tend to think that the underlying weakness are still there, they are coming back, and based on that it would make them very cautious in terms of doing business in our economy, and that will not be good for us.
What practical advice would you have for businesses and consumers planning to borrow in 2026, given these forecasts and potential policy rate cuts?
Yeah, for those intending to borrow, I think the forecast is good. It looks like lending rates are likely to drop I think they dropped notably already in 2025. It looks like they're likely to drop further. So my advice to those planning to borrow is that debt in particular is likely to be cheaper, so they should approach the market in that regard with confidence. But it's not only about the lending rates, because there are risk assessments that will be carried out by lenders, before they give out their money. And if it so happens that you happen to be assessed as a high risk of being at high risk of default, then you're either going to attract a high margin on that low interest rate, which is going to push the borrowing rates up anyway. So my advice is for borrowers to, if you're a business, look at your books very well, sanitize your books, make sure you have your historical records that proves what you've done in time past, your cash flows, so that when lenders assess, they can tell that you've done it before, and therefore there's a high likelihood that you'll be able to repay the loan, or you have generated cash flows that shows that going forward you'll be able to generate same or more to repay the loan. That way you can easily access the loan without the risk of attracting high interest rates. For individuals as well, it's important that you understand the loan arrangements you are going into and for what purpose, so you can target the right loan, know what the requirements are, and be prepared for it. But generally, if we continue being on the trajectory that we've been on, consistent decline in inflation, which is also pushing Bank of Ghana to drop the monetary policy rate, which is also having some positive impact on lending rates, then we can say that we can expect to approach the debt market in 2026 with a lot of confidence.
All right, Dennis Brown, Associate Director, Deloitte Ghana, thank you so much for your time here on the Marketplace. Now, the Bank of Ghana is moving quickly to streamline operations for all banks and financial institutions in the remittance sector. The central bank has issued new guidelines for institutions looking to operate in the space, including revised rules for registration of international money transfer operators. The regulator warns that it will not hesitate to revoke the license of any bank or financial institution that fails to comply with market regulations. And you're watching The Marketplace. We are taking a short break. When we come back, let's talk tech. Ghanaian startups raised $56 million in 2025. We tell you where the money went. Welcome back. Time to talk tech. And Ghanaian startups raised an estimated $56 million in 2025, navigating a quality over quantity market, according to data from the Big Deal and Tech Library's internal database. While down from 2024's record $127 million, the year highlighted a shift towards sustainable growth and innovative financing, with fintech and climate tech leading the way. Joining me on Zoom, lead for Eyes of Africa, Henry Kobler. Good afternoon to you, Henry. So Ghanaian startup raised $56 million in 2025. That's down from $127 million in 2024. What does this slower pace tell us about the startup scene?
Thank you very much, Daryl. So it's been a year. I think generally when you're having startups looking at growth, which comes in for us, especially with the African continent and much more with Ghana in itself. But I think that one of the things that we would realize is that most of the funding opportunities that are coming had quite a lot of the people not reporting or undisclosed amounts of monies which comes in for most of them, which generally shows that a lot of the startups are not willing to put most of the figures out there, and that could accumulate to why we're having or showing this number. But again, I think that innovation in itself, especially within the climate where you're having a change of government coming, gives a lot of investors the point where they want to hold on a little bit, understand the climate that it presents to them, and then be able to now show how they would relatively want to take it from there. And so it might just be the numbers from there, but for me, it might be lower in terms of numbers, but I think that quite a lot of startups are putting themselves in the way where they're changing most of the innovations. They're sort of putting out their growth process and sustainability is coming in through, and then given the opportunities, I think that most of them are also going through due diligences to be able to raise funding in thereof.
Well, to your point, some big deals like Jetstream Africa and FreezeLink didn't disclose how much they raised. Why are more startups keeping their funding private?
It depends. Startups have various reasons for keeping their funding opportunities undisclosed. It can relatively come in from what and how they're raising these fundings and how they really want to be able to have the growth process without pressure from the economy in itself. I mean, if you're looking at the ones that would disclose, like ZPay, which would put in almost about 18 million. ZPay is a very big company now, and they have all the resources. They could probably manage PR resources and all of that, and then also go about their duties. If you'd realize, they still do not even put in so much marketing processes and showing because of their procedures, really. And so companies from Ghana might be on that path as well, where they would want to maybe focus on the innovations, focus on the dynamics, the sustainabilities, and making sure that the opportunities and the processes are sort of in line and in place for them. I'm sure that quite a number of them would really be looking into putting the numbers out, especially when they are going out from Series 1 or Series A processes into different seasons. I'm sure that the numbers really would start making sense if they get to have good processes lined up for them.
Yeah, and we also understand that almost half of the top deals were done as loans and not equity. Why are startups turning to debt more now?
It's the new normal. I mean, generally, you were having quite a lot of founders looking at the alternatives when you're not able to have equities, and that really would give you the leverage to grow, because again, you're looking at your product, you're looking at how better off it is, you're looking at the numbers that it's channeling in, and you have the confidence in your product. You will definitely want to just pick in the investment opportunities that surround it, rather than just depending on your own funding or your own user rates or the amount of users that are sort of jumping on your applications and all of that. You would pick up the alternative, which is not a hard one. Again, we're having the rise of hard tech coming in, where investors are looking purely away from the softwares. They're looking at different things in itself, and they would really want to put in money in any part. I'm looking at now a lot of AI applications that are coming in. I'm looking at e-mobilities that are coming in. I'm looking at cryptocurrencies and blockchain technologies. I mean, these are very new technologies. You would really sometimes struggle to have funding in these regards, but investors are also willing to put their monies in these parts only if you guarantee them some level of success. And I think that under all of that, you're going to have some funders pick up these opportunities and run with them.
And like you point out, the investors are putting more money into hard tech like e-mobility and agri-tech. What's driving this shift?
Like I mentioned already, I mean, it's the new normal, if I have to say. It's where people are looking at. I was driving today, and I could see quite a number of EV vehicles coming in. It gives you an advantage to feel that, okay, it's an opportunity. It's the place where you would want to do an early investment and pick up the opportunities therein. It's a place where you can also do a lot of experiments as well, and get the curiosities of users as well. And then again, investors are also looking at where they could have their growth for a bit of time rather than what is normal. I mean, anybody who's going into e-commerce funding now is really going to be very difficult. And so I'd rather put my money in e-mobilities when I know that EV vehicles are coming in. I mean, if I decide to today put up a filling station, an investor is really looking at putting up charging stations rather. It makes it easy to invest in a charging station today, because it makes it quite easy. The government is putting in policies that guide EVs and all of that. I, as an investor, any day will put my money there. And so it makes it easier for any startup founder to sort of be looking at that and then making their pitch to any investor to get their money in there and to run with it.
Well, we've got a minute. As we look into the year, which sectors or types of funding do you think will lead Ghana's startup market?
I think equity will slowly coming again, especially when the product speaks for itself, but we'll still have to just hit up on the loans.
Thank you so much, Henry Kobler, lead for Eyes of Africa. Appreciate your time on the marketplace. Well, before we go, more news on our website, nigeriaonline.com/business. We've got our eye still on the issues to do with the fuel price floor policy. Fuel price cuts were expected. Comac explains sudden drop amid Gulf Star oil price war. We expect that emergency meeting we have been reporting to happen tomorrow, and hopefully we will have an update on that. Also, coalition calls for probe into Heath Goldfields takeover of Bogoso Prestea mine. Details on myjoyonline.com/business. My name is Darryl Kwao. Thanks for watching. We will be back same time tomorrow.